Making money with cryptocurrencies may appear more doable than many people think. Let's take a closer look at this. We're going to get into a subject that many of you are passionate about in today's episode: making money with cryptocurrencies. Regardless of whether you're more interested in the idea of decentralization than I am, or vechain is your main concern, everyone has something in common. Nobody likes to lose money. Everyone wants to make softish returns on their investments. Investing their time and energy and their hobbies or passions can yield a shockingly simple way to make money in the cryptocurrency space. This tactic has worked well for both traditional financial markets and digital currencies. I'll provide you with a sneaky way to increase the value of your cryptocurrency assets. We're discussing the dollar cost averaging DCA strategy, which we'll discuss today. By the end of this video, I'll share with you a particular insight and a crucial lesson that I won't give away, so pay attention and try to catch it. Determine the fundamental lesson. Visualize in the broad world of cryptocurrencies. XRP is a jewel. If you happened upon it back in 2013, which was a chance that many people passed on, even if I'm actively working in the cryptocurrency field. Let's say that you confiscated Bitcoin or XRP at that time, taking into account that I own Bitcoin myself. Such chances were real in 2012, even though many of you are probably thinking, if only I had known this back then. The discussion will focus on how to use these tactics in the present. I need your quick favor before we go into today's fantastic updates. To inquire about your enjoyment of our content, provide us with your support. Hit the like button, subscribe to our channel, and ring the bell to join our wonderful community. What if you made the weekly decision to invest $100, often known as in bones by some, into XRP from 2013 onward? Your total investment would have been around $544,000. Now estimate that figure. Investing you did here today. Yes, an astounding $1.44 million. Amazing, isn't that your talent? It's impressive to see the numbers rise from $54,000 to $1.44 million. Million is an incredible idea, but let's temper our enthusiasm with a little. Had you actually decided to liquidate in 2018, you invested a total of $27,000. Investment might have grown to an astounding $5.3 million. On the other hand, if you had invested about $227,000 at the beginning and bought in at the pinnacle, your returns today would have been, to put it mildly, negligible. Highlights: even after 12 years in the cryptocurrency space, I must agree that timing your exit strategy is difficult because of the volatility of cryptocurrency investing. Although the dollar cost averaging method has proven to be a successful means of generating wealth, it is not without danger. Notably, if you have invested, what's the lesson learned since the peak here? Securing revenues is essential along the road. Refrain from becoming unduly greedy. The adage, "Don't chase a gift horse in the mouth," is aptly applicable in this situation. Keeping your investments in your hands may not always be the wisest course of action. The idea of diamond hands supporting steadfast investment holdings frequently has poor conception. In reality, what we're promoting is the notion of powerful hands, the ability to endure market downturns without panicking and selling at the wrong times. This is an important strategy for investors, not traders, who need to understand that it's not always a good idea to hang on for the long haul. Finding the ideal time to sell your position is crucial, because although XRP is regarded as the standard in the world of digital currencies due to its use in banking and international settlement, it is unlikely to become the common currency used by the general public. A $100 monthly investment could have grown to $1.44 million by averaging into XRP from its inception in 2013. But the true challenge and lesson here is the art of discovery such chances early on, which necessitates thorough investigation and a proactive approach. The market is still risky and unclear, factors that have a big impact on everyone's investment decisions, from big institutional players to ordinary retail investors. The main source of uncertainty is evaluating the possible risks associated with stock and cryptocurrency investments. Chairman Powell's remarks at the recent Federal Reserve meeting and the decision not to raise interest rates, which surprised many, have only increased this uncertainty. This highlights the significance of being well-informed and strategic when navigating the unpredictable world of investing. The recent decision by the Federal Reserve to maintain the current interest rate came as no surprise. but it left many waiting for Chairman Powell to provide some insight into the outlook for 2024. Specifically, there was hope that Powell would provide some indications regarding whether interest rate reductions, which would essentially ease the financial constraints currently in place, would be forthcoming. However, Powell's remarks notably lacked clear guidance on future rate cuts, injecting a heightened level of risk and uncertainty into the financial landscape as we look toward 2024. This lack of clarity has metaphorically muddied the waters for investors and analysts trying to navigate the upcoming year without signaling an immediate financial crisis. The decision represents another obstacle in the ongoing. It is apparent that market participants are navigating a complex situation as they attempt to interpret the Federal Reserve stance, feeling as though they are on the receiving end of a barrage of blows in this metaphorical fight due to the referee's lack of clear signals. This situation highlights the tricky balancing act. By striking a balance between the need to create a favorable economic climate and the fight against inflation, the Federal Reserve's cautious approach must be understood by emphasizing the complex interactions between decisions about monetary policy and their wider economic consequences. They are not giving away all of their plans' details, and they are closely monitoring several economic metrics such as inflation rates, GDP reports, and more to manage the changing economic environment. But for us retail cryptocurrency investors, the risk and uncertainty that currently exist deter a wide range of investors, from small investors like ourselves to major financial institutions, from actively investing in this sphere. Causes a sizable amount of money to stay uninvested. We should exercise caution due to the significant perceived risk and ambiguity associated with investing in cryptocurrencies like Bitcoin, Ethereum, Cardano, or any other digital asset judged too high. Today's developments have made this already widespread risk even more hazy, further complicating our decision-making. These circumstances extend